Glad to stay with us. The Central Bank of Nigeria has unveiled revised guidelines for the Nigerian foreign exchange market. The new regulations consolidate all forex windows into a unified framework, redefine the roles of market participants, and enforce stricter compliance and transparency measures. Among the key updates are the reintroduction of licensed bureau de change operators into the official forex market, centralized pricing through the electronic foreign exchange matching system, and implementation of real-time reporting requirements for all transactions. Joining me to unpack this is Oladipo Ajayi, Head, Fixed Income and Forex, Chapel Hill, Denham. Thank you, Oladipo, for joining me today.
Good morning, Rebecca. Thank you very much for having me this morning.
Absolutely, as always. Now, the CBN has just published the revised forex market guidelines, which consolidate all forex windows, redefine the roles of market participants, and of course, introducing stricter compliance and transparency measures. I believe you have seen that document. What's your overall assessment of it?
Well, when we look at the build up to where we have gotten now, I think it's just a layer on what the central bank has been doing. I'm sure you remember sometime last year, the central bank came up with the policies around licensing the BDC. And I think it's just more like one of the process to actually take them to where we are currently. And when you look at the overall document, the main motive is what? For price transparency, because sometimes we get calls from foreign guys at times. They want to know where the currency is trading, and so it means that it's not transparent enough. They can't see where market is trading per time. Most time they need to actually rely on third party information around that. But what this would do is that it gives them access to be able to actually measure market and see where market is trading at any particular point in time. And also another thing also is that they also help the depth of the market and also help price discovery. So when you look at it overall, I think it's actually a laudable one on the part of the central bank. It's just one of the steps on the right direction.
Right. Talking about price discovery, the electronic forex matching system is actually expected to address the disconnect between the current Naira-to-dollar exchange rate and the Naira's true market value. And not only that, all forex transactions are now required to be priced through a centralized platform, and their daily forex rates are expected to be published for public access. How ingenious is this, and what will be the impact? Do you see any challenges in the efficient implementation of this?
Well, I don't see any challenges in this regard. I think the central bank has actually been preempting the players in this industry around this, and also they've given them ample time for them to actually tidy up and actually put their house in order. The implementation, and I think they gave them ample time around that. And so a lot of them are very much prepared for today's launch. And I'm sure they are already ready for the requirements. And like I said earlier on, it will help the markets actually. It will collapse market into one single market. I've said it times with that number that one of the things that is putting pressure on Naira at the parallel market segment is invisible demands, and where people need to pay school fees, you are traveling, and medical tourism. These people are not adequately catered for. But now what the window has allowed is that whether you are coming for invisible or you are coming from M transaction, that's from A transaction, you can actually access this market and actually get your order filled. And it's not only that, it's not only the banks that are actually participants in this market. We have the BDC also playing a great role in this market. And like I said earlier on, that is more like a build up to what the central bank has been doing. Sometime last year, earlier this year, central bank released a circular around the fact that the IMTO, the BDC can actually buy funds from the IMTO. They work together. So it simply means that BDC playing also in this market will also help the level of liquidity that will come to this market. So when you look at it overall, it's actually a great one. And but I just think that the central bank needs to also be hands-on. Because it's another thing for you to actually dole out a very good policy, but it's another thing for you to ensure full implementation and compliance. And I think that's one of the things that central bank needs to be very strict around.
Absolutely. I'd like you to talk to us about, the consolidation of Forex windows. I mean, some of us thought that, that sort of came with the floating of the Naira. So let's get more clarity on that.
Well, the floating of Naira, what floating of Naira did is, let's get it clear. At a time before the current government, we have the official window trading at 450 Naira, and the parallel market was trading around 750 Naira. And most time, no foreign investors want to come to your market in such a time when your currency has about over 300 Naira the differential. And so a lot of investors are actually waiting at the door until when you guys can make the right decision. And so what we did then was to align both the official market and the unofficial market into the same pricing, because a lot of liquidity were going through the unofficial market. Even manufacturers, exporters rather, they would rather sell their phone through the unofficial market at that 300 premium than bringing the phone to the official market. So what we did was to harmonize all the windows, more like the unofficial and the official window, into a one window, and so that the price can actually trade around the same range. And since then, we've seen that the differential between what's happening in the official market and the market that we call the unofficial market range just should be around maybe like 15 Naira to 17 Naira, which is also negligible. So what this simply means that we have the NAFEX window, we have the NAFEM window. What the central bank is saying currently that all windows will just be one. It simply means that there's no window for invisible, there's no window for from M transaction. Everyone goes to the same window. There's no window for autonomous transaction. Everyone goes into this window. So it means that what the central bank is trying to do is to collate all liquidity into one market. And what this will do to central bank, that it helps you to be able to actually track the level of liquidity in the market. It helps you to be able to monitor the market. It helps you to actually be able to provide data to data users. And I think it's a very good one.
Well, what does this mean, for the unlicensed foreign currency traders we see on the streets and in the markets? Will their operations be affected in any way by this?
Well, Professor, I think one way or the other, it will have negative impact on that. And like I said, if you look at all the policies that the central bank has been shunning out, I think it's more like a build-up. Sometimes about 2 or 3 weeks ago, there was a circular around everyone that has fiscal dollar should just ensure that you bring it into the banking system. And when you now hear things like this, also tells you a story that there's a build-up to what the central bank is doing. And I'm sure by the time the central bank climax on this thing, a lot of people will be wow, because it will be like more like a full FX framework that should be all that. I feel that if it's well implemented and well supervised, will be very, very effective. So the people on the street will actually be affected. The people that operate from the unautonomous markets will also be affected, because what it means to them is that they will not be seeing that level of liquidity that they are seeing that is coming through their window. And so now all windows come to this market because it's real time and all time, all online real time. You can know the prices at any particular point in time. And the reporting framework is actually very exceptional because what central bank has done in the market maker and the banks are meant to report immediately. So it's all online real-time reporting for them. The other license participants like the BDC, what they are allowed to do is that you are supposed to report every 30 minutes. And also at the end of the day, send a report to central bank through a particular portal. So when you look at it, I think it's a very good one, and people on the street will actually be heavily affected with this.
All right, I'd like you to just sort of take us through the interbank, the structured interbank trading. I'd like you to speak a bit more to it so we can know what has actually changed.
Well, the interbank market, the way it operates is that it's more like a market where it's only the banks are actually participating in, and that's why it's called interbank. And this particular market, when the central bank comes in, everybody knows that the central bank is coming into the market, and people will adjust their quotes in accordance to what they would have done. So it simply means that if a bank A called bank B, the pricing you will quote will be different from when you are buying from central bank. So it means that if a bank calls a bank, you can quote 1,650. But in central bank that is calling you, you will quote that far lower than that, maybe like 1,550 naira, like maybe a discount of like 100 naira. But the new platform, the way it works is the exact platform that we use in trading bond. So it's more like a platform where it is autonomous. It is your identity is protected. It means that you can you don't know who you are trading with. So it simply means that the central bank can come to the market. You don't know that it's central bank, and they will trade and create liquidity and do whatever transaction they want to do in the market without you knowing that it's central bank. A BDC operator can come to the market and trade, and a bank will not know that it's a BDC operator that's actually trading in the market. So what this has done is that it protects identity, and what it would have done also is that because there's a way that you see and also help to actually prevent market malpractices. Because it simply means that if you know a seller, you can just call the person outside the market. So I can buy this that you want to sell at so price. But this one, you don't even know who is selling. You don't know who is trading. So it means that you are just meant to put your bid and offer on the platform for trading. Another thing that central bank has done is that to actually create more like a market maker. And the market maker, they are mandated to every time to always put their buying price and their selling price in the market. So what that will do is that it creates market depth, it creates market liquidity. It also helps people that want to do then transaction to go to the market without being bothered that maybe they might be seller or they might not be seller in the market, because they know that there will always be a market maker in the market to actually make markets on FX for them.
All right, just before we move on, I'd like you to just answer, yes or no. Are we going to be seeing these other guys on the streets moving forward?
To be realistic, you can't totally just remove them like that because most of them deal with physical cash, and this what we are talking about is not about physical. So it simply means that you still see ample of them on the streets, and so because you have people that are coming in. Maybe tourists are coming into the country. You have Nigerian in Darfur that are visiting. They also have where they want to sell some of these FX, and you will feel them on the street, but they won't be as rampant as we have been seeing them. And another thing also that I also think is that most of these guys are moving beyond just doing more like dollar cash and Naira cash transaction. They are moving into doing big ticket transactions, but that segment will be totally taken over from them because this particular market will help to actually put clarity on that and also give more like a price discovery.
All right, Mr. Oladipo, before we continue, I would like us to watch this particular snippet. It's from Zil Akarawe, a financial market analyst, and I would like you to comment on it after we watch it. Thank you.
With the reforms going on at the central bank, foreign exchange is already improving. It's not transmitting into the market because of an issue with the market mechanism that's being worked on. There's something being introduced on the 1st of December by the central bank. So over a period of a couple of weeks or months, we expect to see some significant improvements, especially with FX and inflation going into early next year.
Right, Oladipo, I'd like you to comment on that because before now, I had a conversation with him where he was saying that supply is not an issue. We have a lot of the foreign currency coming in, but the challenge we're having is transmission. The challenge we're having is seeing the impact of this on the value of the Naira. Do you agree with that?
Well, I will tell you that I agree to some extent, and I will explain like this. For me, I won't totally agree that supply is not an issue, and but I will agree that the transmission is a problem. And because I will look at it from this perspective, and because if there's adequate supply in the market, no matter how we will filter into the pricing of the asset in question, and this is Naira. So it simply means that that should have helped Naira stabilize and Naira actually appreciates in the market. And one of the reasons why I also feel that supply is also the issue is that there's still depth of supply in the market. The only supply of FX in the market is central bank. And Perpetual Central Bank before now, we used to have a system where everyone knows when central bank is coming to the market. It means that central bank, there's a calendar that every Monday and every Wednesday, the central bank will be in the market to actually offer maybe a WDAS, a retail dog auction or a wholesale dog auction. and the market would have prepared around that. But now we don't even know how central bank intervenes. Central bank just come at will, and you may see central bank this week, and you may not see them in the next 2 weeks in the market. It also means that there's supply issue in that regard. And also, what I mean about the transmission mechanism is that central bank goes into an interbank market and you actually sell funds into the market. But yet, the end user are not feeling the effect of what you are selling into the market. And that's one of the reasons why I'm actually an ardent believer that in such a time like this, what the central bank should just adopt is more like a retail Dutch auction, where the central bank will have banks to actually submit the bids of their customer. And central bank will actually allocate these bids and publish the name of those customers on a daily newspaper, even on the central bank website, and the amounts allocated to this bank. What this will do is that it will help transparency. What this will do is that it will help the fund get to the end user, rather than just selling it to
all right, Mr. Jai, I'm afraid we need to go in less than 2 minutes now. So I'd like to ask you, I mean, these reforms, these guidelines we're talking about, are they sufficient in themselves to sort of enhance investor confidence and attract foreign inflows? Because when you look at all of this, it feels like it's more like a management mechanism. I don't see this, improving supply. Let me get your thoughts and we'll close on that.
Well, I think it will. It will help supply, because one of the reasons why I mentioned earlier that most of the foreign guys will call you, where's Naira trading, where's Naira-to-dollar trading at this particular point. But now they don't need to. They have access to see the market, to see what's happening in the market. So what that will mean to them is that there's a bit of transparency and they can do what they want to do at that particular point. So I think it's a very good one. It will also help and improve confidence in that regard. But maybe in the long run, it will also help to actually improve supply to the market.
Okay, so let me just take 30 seconds of your time. Talk to us about your thoughts on improving Nigeria's Forex earning capacity. Let's close in 30 seconds.
Well, improving any earning capacity, as we speak currently, we all know that the best way to do it currently, while we are looking at the long term, but short term, is to improve our oil production. So we need to actually ensure that we actually develop that sector. We need to ensure that we attract investment to that sector, because a country like Nigeria, that with this level of population, we cannot be producing like 1.5, 1.6 million barrels per day when we have opportunity to do over 2 million barrels per day.
Thank you so much, Aladikma Jai, Head Fixed Income and Forex, Chapel Hill, Denham. Thanks for your time and thoughts on the show today.
You're welcome. Thank you very much for having me, Pepper.
All right.